live viewer, twin.
Huh?
We got a live viewer the whole time.
I know, but if we end up having a thought for it to make sense to ask a live question or something like that to somebody who don't be behind it, like
Okay.
That's just if it ends up popping in the head. That's it. So be prepared if I end up having something pop in my head, man. I might ask you something, hand you the mic. What's going on? How we looking? You see us?
Yeah, I see y'all.
Let me see.
We looking all right?
Yeah, I look good.
All right, bet. What's going on, Full Circle, man? It's your boy Go Getter.
It's your boy Flash, man. You know what day it is. It's the last Wednesday of June.
Last Wednesday.
of June. Let me put this on the Instagram real quick.
You guys almost see me bust the whole monitor. Ooh. Man, Spiden hit 731.
We live right
You
now.
guys know how it go.
Tap the Discord button. I'm up. One more time, because what am I talking about? We live right now on Twitch, man. Join the live. You see what's going on. I'm going to leave a link right here. Join the live. We live right now on. How you living today, twin?
I'm feeling good, man. You know, a lot of stuff been going on in the market, and I'm excited to talk about it. Is your phone still charging? I think I just don't allow it.
No, you're good.
All right, bet. A lot of news, and we about to talk about it. Monday had some news. Tuesday had some news. We even woke up to some news today, Wednesday.
Okay.
The market done had its dip. Always great when the market done had its dip. The memory stocks done dipped off. Micron has their earnings releasing today. I mean, the market is marketing, man. You know, there's not much for me to complain about. How you feeling?
I'm feeling good, man. It's the last Wednesday, man. We made it through the 6 month period. We moving on to the 7th month, man. We getting out of that, moving toward the third quarter. You know what I'm saying?
Mm-hmm.
We in there. We are in there. We's in there. The whole time.
Come on, there we go.
We in there, so yeah, can't complain.
We got silver at $56.
Ooh, nothing but opportunity.
Definitely need to take that trip up there. No games being played. You might see us make that trip and grab some silver physically next month, man, because $56, that's a steal.
As a steal.
Even gold being down below, that's a steal to that 30, 39.80 right there. So, hey, markets is marketing, man. So, you know, we got some news. Before we even get into the charts, man, I got a few news that I would love to hear your thoughts about, man.
Let me hear
you know,
it.
how
Let me
we
see
do
it.
it. You know, so we're going to go Monday, Tuesday, Wednesday, and see what didn't happen, man.
Okay.
So, Monday... Let me pull the SPY chart up too. Monday we had U.S. and Iran. They ended up agreeing to a deal, to settle a deal in the next 60 days. Today we also just got that news that, you know, the ships have been flowing for the last 4 days.
Yeah.
You know what I'm saying? So it's looking promising. It's looking like we're going to continue in. We continue in, and it's going to continue to stay open. Sorry about that. Tell me how you feel about that, man. You see anything about it?
Yes, I have. My opinion on it is it's long overdue, man. We've also been here before. Hopefully the strait stays open. You know what I'm saying? It gives opportunity for the oil to flow. The oil is down as well. Oil hit like $78 a barrel the last time I looked.
Last time
I think it was like 76, 78.
I just looked the other day. He was right. I just got something this morning that said it dropped as well. So
Freshman.
69 right
69. That is insane. So just touching on that, man, we see that now that the deal is made, oil isn't outrageous, right? Now,
back to what you're even saying about oil. The WTI, March 2nd was the last time we have fallen below $70. Brent crude, this is the lowest level it's been at since before the U.S. and Israel launched airstrikes against Iran on February 28th. So this is the lowest oil has been since February 28th. I read earlier that it'll take a couple weeks for those gas prices to go down because the oil suppliers, it'll take a couple weeks for them to just get the gasoline prices down. You know what I'm saying?
yeah.
So yeah. Just to continue on what you said, that's why I brought that up.
Yeah, no, it makes perfect sense, man. Hopefully that not only the gas is positively affected, but also the markets too, man. We get the same type of results from not only oil, but SPY, right? The NAS, commodities, all that.
Yeah, man. So, that's some new news. Let's hope that sticks. U.S. President Donald Trump on Wednesday criticized oil companies for not lowering gasoline prices in line with the recent decline in crude prices.
You can smell the get over right there, though, too. And they're trying to milk that money as best as possible.
Yeah, right there.
Oh, shit, I got you.
Go ahead.
The big oil companies are not dropping their price at the pump commensurate with the sharply lower prices they are paying for oil. Those prices are dropping like a rock, Trump wrote in a Truth Social post. In other words, customers are being gouged. I have instructed the DOJ to immediately start looking into this. Gasoline prices better start going down a lot faster than what I'm seeing. So he's threatening these big oil companies. That's Exxon. What's that? What's another one?
ExxonMobil, Chevron,
Shell.
As a result, actually, let's see how these companies are doing as a result. This is the FCW portfolio. Let's go to the watch list. So you got these companies dropping as a result, man. Ooh. Chevron was pushing towards 200 March 26th when the oil prices was really high and the war started. Now we're at 170. ExxonMobil had a high of 175 March 26th. And now it's at 136, man. If you've been in the Discord, man, you was able to cop it when it was down here when we was talking about it around even last year, but that was last year. You guys really ain't getting hip until now. You know what I'm saying? Full circle well, things started growing until 2026. Y'all was late to the party. We was early to the party. 104 to 175. We got in the oil, man. We already knew about that. But look,
those charts are looking the same. The Exxon and the Chevron,
right? That's the oil suppliers for you, man.
Crazy.
Just like I was talking about, I made a few Instagram videos about that. Wherever they're taking money from us, there's somewhere else for us to get it back on the other side.
Right, it's that cycle.
If you knew about the market, you're investing into these oil companies as the gas prices is going high, and you using you could be using the profits from these oil companies to make up all the stuff that you already been spending on gas. So you're getting it right back, and when you take your profit or however you do it, man, understand the markets, man. Some other news. Google is still kind of staying in that range today. We ended up broken out. This is a clear example of support and resistance, man. We got them circles up there. It was resisting that 369, resisted off that 369. It was supporting off that and bouncing off that 354. We blew right through the support, tested 342, but Google ended up dropping due to the fact that its top research is leaving the OpenAI and Anthropic. But then Tuesday, the next day, They ended up saying that, they ended up announcing that Google will be replacing Verizon in the Dow Jones. The Dow Jones Industrial Average Index made up of 30 of the most prominent companies, right? You see these tech companies falling. Another reason as to why you should be buying a dip, because anytime they end up going red out of nowhere, it's not a reason to be fearful, because at the end of the day, they added them to the Dow Jones, signaling that this is still a prominent company. This is still a growing company. And we look at the numbers, we ain't just looking at the charts and the headlines. So how you feel about the Google and the leaving for OpenAI and the Anthropic and that rivalry that we got going on now, man?
Yeah, like when you do something for so long and you see that it's working, right? But there might be a better way to use it and effectively utilize that skill set what you're doing. I feel like this is one of those plays right here. We know how big Google is, but we also know the upbringing of OpenAI and Anthropic. These are two major companies that are IPOing this year. I think Anthropic is in October. I forget when OpenAI is, but you're waiting for that Anthropic. You know what I'm saying? I can't wait to see what their IPO price is. But I feel like that's one of these type of examples where, just like something works, but I'm going to this place to work it more effectively. Yeah. I think the upside is massive on their part. John Jumper is one of the guys' names. I forgot the other guys like Zara or Xanif. It's something like that. Start with a Z.
But no, that's a good point that you made. That's they leaving what's trying to continue to be the future for what already is the future. Exactly. I mean, Anthropic already got Claude, OpenAI. Yeah, they're lagging behind Anthropic, but honestly, OpenAI they got ChatGPT. That's the forerunner in that model space, and these guys already have the models. These models is going to be in the businesses, and Google's actually doing their thing, adding their AI models and growing their AI. And I had just watched a documentary on that DeepMind. We actually watched that together in the Discord community because we're live every day. That's why you need to join. Right? We learning up every day. We end up watching a documentary on Google's DeepMind, right? And that is their AI, the AI startup that they bought for $400 million in 2014, and they were like the pioneers of this whole AI space. So Google's still there. They're just trying to make sure that they still compete because they got to keep up with Anthropic, OpenAI, all these language models, these companies, and they're being the best right now throughout the top tech companies. So Google has dropped 15% from its all-time high. It's at 400. The all-time high was at 400. It's still below 400. I mean, if you get it below 400, Google's gonna for sure be a $500 stock. They're for sure gonna get another split down the line, I believe. I mean, they're right here. It says their guided 2026 capex, which is the money that they're gonna be spending on investing into things to build a business, 180 to 190 billion, and said spending will rise again in 2027. I mean, these companies ain't playing. You got Google spending money, you got Meta spending money. I think Amazon too. These companies is just trying to really stay afloat with this AI stuff, man. Because if they get pushed out, they have that chance to get pushed out. They have that chance because you got to make sure that you're staying afloat. You know, what was you about to say?
Touching on that, these two deep AI researchers, they're leaving. I think another thing, what I was going to say was, I think another thing for Google is the fact that they're not primarily an AI company like OpenAI and Anthropic is, and so they have a lot of other things that they work and put their money into. So that's why they're a $1 trillion company. But when it comes to creating a $1 trillion company that's in the lower billions or whatever the case may be, man,
that's a good point.
You know what I'm saying? That what would you call that? That upscale.
Just that upside in that
upside,
in the market, we would look at the asymmetric upside. You know what I'm saying? Because for example, what you just said, it triggered the thought of Anthropic hasn't been IPO'd yet.
Yeah.
We just had a person who just left Google, and this was the guy that left for Anthropic said. They said he already left before. This was his second time back, and he hasn't even been there for 2 years and said, I'm going to Anthropic.
Yeah.
Anthropic is about the IPO. We just saw what happened with the SpaceX shares being IPO. If he's an employee at Anthropic, he gets some shares, you get some private shares, you get the benefit from that, and then you get the benefit from the IPO. From when everybody else invests, you make all that money.
Let alone what they might use him for at Anthropic too. They might put his skill set to extreme measures, while at Google, you know what I'm saying, they prioritize a little bit of other things. Right? So,
you're right, because you might have some more fun working on OpenAI. I mean, AI is AI. Working with these large language models, that's something different. You ain't working on no web browsers no more.
Nah.
So that was we still on Monday. So this is all Monday. On Monday, Amazon drops as well, right? I forgot their reasoning. They have AWS revenue rose 28% year over year, fastest in 15 quarters. They have Trainium AI chips hit $20 billion annualized revenue run rate. Amazon expanded its ultra-fast now delivery from 15 plus to 300 Indian cities. CEO Jassy visited India and toured a quick commerce warehouse signaling scale up Amazon's rapid delivery. So they got a rapid delivery in India. Ordered Amazon to recognize and bargain with Teamsters at, I don't know what this means, before Prime Day. Amazon disagrees and has appealed. This follows a recent NLRB order. Amazon Prime Day puts ETFs in the focus. I wanted to just read about this real quick.
While you read on that, man, Amazon moved their Prime Day up like a month. You know what I'm saying? Right before they have their earnings that come up in August, right? So playing that game like that.
That's what I thought I was going to touch on a little bit. I'm glad that you touched on that, because that was the reason for this dip. People didn't like. I mean, this actually break retest. This is the daily time frame. It's been kind of dipping for the last since June 3rd. Man, Amazon's gonna hit 300 too. I mean, this is a growing company. No matter what, Amazon is still a top company. When you see red opportunity, if you're watching Wealth Wednesday, choose Amazon, Apple, Google. Which one are you picking? Amazon is gonna hit that 300. It's at 236.
Okay.
How much from the all-time high? This is how you wanna.
Like 40.
We're 15. These are literally perfect buy-in opportunities, not financial advice.
Not financial advice.
But if I buy Meta at these opportunities. I'm still buying Meta at 558. However, it's like 30% from its all-time high. That's a big risk and good upside, but it's not a big risk because we know it's not as big of a risk because we know Meta, man. You using Instagram right now.
Yeah.
With that being said, they moved their Prime Day up ahead. Investors weren't feeling that, and they was talking about, hey, money's kind of tight right now for a lot of people. You guys are moving the Prime Day ahead. Interest rates is looking like they're going to be higher later on. We don't know if it's going to spend the money like that. What you got to say about the Prime Day, them moving up ahead, bro?
Yeah,
what
man.
You see about it?
It's making sense for that for their revenue and everything to be going up as much as possible because they know that they hit all time highs and then been down for however many weeks, probably like 2 or 3 weeks, right? Oh shit.
1, 2, 3, 4, about four weeks now.
Yeah. About 6 weeks ago, they hit their all-time high, so they know what they're doing. You know what I'm saying? They know how to play the game when it comes to managing their stock. They got a whole industry of people for that, right? So, but I think that this is a I wouldn't call it a front because that seems like a negative connotation, but it just seems like a money grab. Like they know what they're doing when it comes to putting and proving numbers, and that they're a growing company rather than something that shouldn't be invested in. They got to tell us their analytics and all their data.
Yep. And
tell us how much money they're making, right? So, come August, definitely we're gonna have. We're first of all, there is this gap that's right here, right? I'm not saying that we would go that low, but I do feel like Amazon is gonna keep dipping, and then after leading up toward these earnings, we're gonna see that they're gonna be positive, which might bring us back to the higher cost of Amazon. What day is that?
It was July 26th.
July, so it ain't even in August. It's in
July 30th. July 30th.
Come on now.
Yeah,
I think that we gonna test something below, not go as low as this level here, but because what is this? 200? Yeah, nah. I don't think we're gonna go that low.
That's 220.
Yeah, 220. I think that's fair. Maybe 225, but towards the end of July, we coming up for them earnings.
So boom, we had on Tuesday. Now that we got the Tuesday, we ended up dropping overnight from 744 to opening Tuesday at 733. And Tuesday we had some news in South Korea, man. The South Korea ended up dropping due to Samsung, and they have a company, SK Hynix, two of the biggest memory chip makers out there. They ended up dropping overnight. One fell 12%, the other fell 9%. You had Micron fell, which is one of the top chip makers in the U.S., right? And you had DRAM, the ETF fell that we were able to pick up in that $70 range. It ended up dropping 15%.
DRAM?
Like DRAM.
Like DRAM? This is an ETF?
Yeah, it's an ETF, and it tracks the memory companies.
Okay.
It tracks the top. It got Micron up in there. It got.
That's funny.
It got. Man, what's the other memory companies, man? I think Marvell's up in there. I'll put it in the Discord. I think I already did. But yes, sir. That ended up falling on Tuesday, causing the whole memory sector to fall. Just like any other time, memories have been running up. You get the catalyst coming in, they dip, and that's a prime level, right? So let's see if we can stay. Do we bounce off that prime level that we got to, or do we continue to the downside and go reach another level, right? Whatever happens, a 15% drop is still a 15% drop. Got to take advantage of that, man. So that was DRAM Tuesday. Anything you got to say about that?
Nah, you broke it down perfectly. $67 for the ETF, man. I'm gonna do some research as well, cause hold on.
Yeah.
Especially with all this AI and chip making happening, man. You need that software.
That memory is that layer. We haven't talked about that enough, but you guys will see us talk about that a lot more. That memory is, the semiconductors, these AI models, they can't do nothing without the memory, and these companies, they make the memory. So over the next 10 years, where you got AI and all these models growing and all these companies getting into AI, they're going to need that memory. Yep. So a $67 ETF, we know that's going to not financial advice, it could hit $100, right? More likely to hit $100 over the next few years, $200 over the next few years. I mean, we're getting it now before it even hits 100. So, hey, I think the upside to that is promising, especially if you believe in AI. So, semiconductors, memory, and then the tech companies with the models and stuff. One of those days we'll break that down in Full Circle Wealth. But really, we ended up having to drop. Everybody ended up panicking. I really just wanted to emphasize zooming out on the chart, right? Yes, market has been dipping the last couple of days, but if you really zoom out, we're still in an uptrend, and this uptrend doesn't get taken out and become a possible bearish trend until we cross that 720 line, right? We got that resistance at 758, the all-time high, right? Market is just consolidating, having a breather is how I see it on this daily time frame, and we're consolidating. And until we cross 720, I'm still believing that we in a bullish trend because the trend is to the upside ultimately, and you don't want to fight the trend. So that's to my people who have any fear. There's no need to fear it, man. Want to touch on Bitcoin a little bit?
Yeah, real quick. What's the percent of where we're down right now from all-time highs? About 3%, and where we had touches already at that 5. Okay, just wanted to see what was up. And you said below this 720, which is more than 5%, is when we're in it. Okay.
Nothing's gonna cause me to say, hey, we may be continuing to the downside until or unless we cross that 720. Until then,
fair.
Don't want to fight the trend.
Don't want to fight the trend. Let's get into that Bitcoin chart real quick, Tony. I'm gonna go over here with it. Read this one. Bitcoin chart, man. Let's go to the weekly. Zoom out a little bit. So, last week we were talking about how we had 2 bear flag patterns, man. Right now, Bitcoin is sitting at 59,549 currently. We are steadily dipping in price, man. Also going down into where price is right now, closer to where price is. This was created about a week and a half ago, right? We seen this bearish flag pattern, and we just broke below and out of that, man. We dipping into this zone here, where we've been before, but not in a while. See, this is back in 2024, hitting those lows. Now, we did have this dip back in February. Remember this dip? This is that crazy dip where everything was low this day, and it was a quick splash for liquidity grab. That was the last time that we've been here, and it was a crazy event that had occurred. So now we're here because this is where the market is. This is natural. This isn't. We've progressed all the way from up here to the higher 80s, and we've been dropping in price since. Coming up from the last time we hit 80,000, we're down 30%. We was talking about this as well last Wednesday from all-time highs. If you didn't tune in, from all-time highs, let me see, get a little bit more. From all-time highs, we are about 55%, 53, from all-time highs, which is 126,000 that we had last October. So right now, when we see this type of market, you have to understand that Bitcoin is dipping. We see that visibly. But that isn't something that you should feel discouraged by, not only because it's low and it's going to keep dipping, but you don't know where it's going to go, when it's going to stop dipping, but it's an opportunity for you to grab pieces of Bitcoin. You know how hard it is for the common person to have one Bitcoin? So you stacking up, you might be, you know what I'm saying? To put it in perspective, say you had $1,000 from your job or whatever you're getting money from, right? And you put in, and price stayed at $60,000 for, this is extremely hypothetical, not financial advice. It's not even real. Bitcoin stayed at 60,000. All you need is 60,000 to get one Bitcoin while price is at 60,000. So let it dip going from 55, just do the math, right? Take into consideration that it is not hard to obtain if you prioritize putting the money in the right place. Now, that's the Bitcoin chart. I do want to touch on the other things going on in the market, man. Yesterday we had market cap at 2.1 trillion. Now today we are down almost 4% in a day at 2,000 or 2 point. You're good. Appreciate it. 2.6 trillion, man. We are dipping in price, but you see that the altcoin indicator is at 48. With that being said, we have a lot of altcoins that are doing numbers. For example, I had talked about this coin crypto. It's called Rise, T-Rise. I had talked about this in the Discord. Let me pull it up real quick because these guys is doing crazy numbers. Ooh wee. Yesterday I was talking about, let me see. I don't know if you can see, but this is all green in the last couple of days. What time frame is this on? The last 24 hours is going in a week. In the last 2 weeks, it's been up. T-Rise is an altcoin that is going to be tokenizing. I talked about this in Discord. You got to go tune into that video. But yesterday, price was only at a penny. Right now, today we had touched just around 2 pennies. So that's already price double just from yesterday. In the last month, this hit us up 500%. Now, but from the very bottom, we are up. Let me go price range. From the very bottom all the way to the top, it's 1,400%. From the very bottom of when you had the time to get into this at the beginning of this month, in June 8th, if you would have put in $100, your $100 would have 14x just from today, from the 8th of January, from the 8th of June all the way to the 23rd, 24th, to the 24th, the 24th of June, man. That's 2 weeks. Your money's 14xing. You don't get those type of returns really anywhere, let alone in 2 weeks. So this is what the altcoin season is looking like, man. This is just the beginning. There's a whole lot more of growth to come to the crypto market. I just wanted to show you where we were in it, man. XRP is $1.05. Anything that if it got $1 in front of it, man, XRP is a great buy. This is institutional, generational wealth that's being created. XRP. I done broke down multiple stories in the Discord. You got to go check that out. Yeah, man. That is the crypto market right there. I don't know what that is. I ain't going to X it out.
No, you're good.
Yeah.
Great crypto breakdown. Now that we're on that tip of looking at opportunities, man, I want you to break down gold and silver for us, man.
Now we talking about the commodities market, man. Now, gold and silver is what I trade. So there being said, gold right now is at $3,900 for 1 troy ounce of gold, coming from the high of like 55, man. Let's see how far we are from the top. Just to give an example, 30%, 29%, man, down 1,000 and some 1,600 points, in price, down 1,600. Excuse me. We are at a level that we haven't been at in a very long time. Right at price. Back in 2025 is the last time that gold has hit this low. Now, gold is a little bit expensive for the common person to get a whole ounce, but silver is not. Just like Fisher Go Getter said, silver is at $56, and we haven't been this low in a very long time, since last year in December. About 6 months, about 7 months. But you see this chart here is nothing but an opportunity. There's no way that you see this chart and be like, hey, I wish, right? Because the time is now. You can clearly see where price is and the upside, right? If we go back to where we are right now, hitting this very low, we go, let's say, back to, let's make it realistic, right? $80. That's a 44% on your investment. So if you go get that physical, no. You need to go get the physical. Not financial advice, but buying a share of silver is not the same or equivalent to having physical silver. troy or physical ounces of silver. That would be the way better option. So just get it from where price is right now today, get it back to $80 an ounce. It's a 40%
I'm taking
gain.
200 and going to buy me some
Come on
silver,
now,
man.
that's all it takes.
It's at 56 for it. What's that, an ounce, 56 ounce?
Yep.
Man.
So that premium, say you wanted to get 10 ounces, that's about $650. You know what I'm saying? At the premium price, maybe $700 at the very high, but
What's the difference between the premium? What's that?
A premium is what so you go to a pawn shop where they sell gold. So you're not gonna buy it for 56. You have to kind of buy their price, how they're taxed on it, because they got to make some money off of it too, right?
Oh, so this is what, like, market price?
That's market price, yes.
Uh-huh.
So if you go to a pawn shop wherever they sell silver or gold, you would probably be buying for like 62 an ounce, right?
Yeah.
60,
That's not
64.
terrible. They need to make their money. They need to
Exactly.
make their money.
So maybe buying even more, maybe reducing that premium because they're making money off of they're making a return on their investment anyway, right? So they're gonna charge you that premium. So they may have gotten gold when it was $12 whatever dollars. They're trying to get that little skim off the top, right?
Yeah,
But that's cool because you're still getting in the game. The person that's dealing you that gold, silver, whatever they know the name of the game, which is holding. So yeah, you take the opportunity to go get you some tangible physical assets like gold and silver because there's no time like now. And you don't want to be 5 years, 2 years, even in the future saying, I wish I could have, I should have. That ain't the way to live, man. Take the time, allocate some money to them investments, Twin.
Yeah, for sure. We gotta sacrifice, man. We gotta sacrifice. It's that time. It's perfect time to start. It's perfect time.
As well as the rest of the market, right? It kind of looks like we're doing around the same numbers, not Bitcoin. But a lot of the things are down right now. You remember we were having that conversation about the fact that sometimes the markets, they reflect each other. They're not moving the same, but like the same percentage wise or price wise, but they reflect each other a lot, man. Are we I know you said that we ain't crossed this threshold of 720, but how you feel about these markets though? We gotta, this is a very particular week, right? It's very, right? This week has been crazy, and like a little bit of last week. But how you feeling about these markets, man? We everything's down right now. Like it's red. Look at it. It's a bleeding day, except for SoFi. Shout out SoFi. You know what's up with SoFi, but
Market is just consolidating and having a breather.
yeah, it's okay.
Right.
Fair.
That's exactly what happens. You clearly see that market has run up on the SPY from March 26th to where we are now. Let me get that. What's that? The percentage? About 20%. You run up 20%. That's why we zoom out and look at the daily chart. And now that we're here, we're at 731. So if you run up 20%, and what did you from where we are now, from the 20% run up, you're still up 16%. So the headlines and the way the market is moving lately is going to make it always seem and feel like it's worse than what it really is. That's why you got to zoom out. Because, in my opinion, market is just consolidating and having a breather after they just ran up continuously like crazy since March. And honestly, market just red, and it'll cause you to think that, oh, panic, you know, whatever. But it's pretty typical, man. You know what I'm saying? Another thing, too, is like we talked about the data, the markets don't like to stay down, right? So until, just like any other time, I'm still thinking that we're going to have this breather, run back up, whatever it is, until proven otherwise. But, I don't think there's any room to panic. What you think?
Nah, likewise, I don't think that it's definitely a time to panic. I look at these as opportunities anyway, so there wouldn't even be no type of panic. And really in the market, the only emotional part is when you see how much money you got in your account, and then you see how much money your investment costs. And that right there that's where all the emotions is, because this is something that you can't necessarily control, especially if you so minimizing your risk and putting forth the right type of strategy when it comes to getting into investments. That's really the only emotional state for me when it comes to putting the money into the investment, because this is gonna happen. These things happen. That's kind of uncontrollable, especially when we got Trump talking about some just admitting to inside trading and things like that. You know what I'm saying? We got Trump doing stuff like that, so there's really nothing that you could do except for get in and ride those waves.
And that's
Grab
it,
your surfboard, man, skateboard, whatever.
That's it, man. Like we talk about, it moves in cycles, and you gotta be able to benefit from understand the cycles, so you don't get faked out. So you can benefit from. I just saw some news. Nvidia at 197. Nvidia been having a little downtrend. Nvidia said China data center H2 shipments were $0 this quarter versus $4.6 billion a year ago.
That's crazy.
Quarter two revenue guidance excludes China data center sales. China data center business reset and risk classified. Nvidia unveiled the Vera Rubin. I don't even know what that is. Aimed at scientific supercomputing workloads. 2026 free cash flow is near 95.4 billion, implying over 97 billion will be available for shareholders. Hey, Nvidia is another great stock too that you need to be copping, man. That's something that's in my portfolio that I believe in for sure. All-time high at 236. Right now we're testing that support of 194. It's at a prime level. Get that below 200 because it's gonna be 300. This is exactly how you got to think, man. You see it in real time. Something that happened today too. Wendy's ended up going crazy parabolic, right? So Wendy's ended up saying, "Hey, we're getting a new CEO from Potbelly," and it shoots up 30%. But also, it's a meme stock that they've been talking about on Reddit. So they all said, "Hey, we're gonna save Wendy's. We're gonna save Wendy's. Let's all get together and save Wendy's." So it ended up overnight going from that low to this high, 46%. Man. That happens, man. The meme stocks happen, man.
$6. Crazy.
These are the stocks that you don't want to invest in.
Hey, look at this chart.
These are the charts that you don't like, right? Wendy's.
Woo.
We all know what Wendy's is. Their low is all the way down here at $5.34.
What happened here from us to go from $5.34 to $22? That is insane. They came out with the biggie bag. It's 2020.
I don't know, man.
What is that? The $5? That's crazy.
But now Wendy's is it's a classic example of you don't always want to invest into popular companies because they're not always popular. I mean, not always profitable. You know what I'm saying? Wendy's is making some money, but they're kind of just staying afloat compared to like McDonald's. One of the things that I have learned recently is that McDonald's ended up saying that once beef prices got more expensive, they said we're just gonna add more chicken to our menu, and we're just gonna sell more chicken because chicken is more cheaper to get. The profits are bigger on chicken, so they're able to stay afloat. And they own the land, most of the land of where they have their locations at. They got a lot of cash flow. That's a whole completely different business model than Wendy's. Wendy's, I recently found out that their slogan is, or they base their business model off of the fresh beef.
Yeah.
And the beef is hella expensive right now, so they can't really pivot and make those moves. McDonald's can. So prime example of, hey, Wendy's shot up 46%. Sometimes crazy stuff happens in the market. Meme stocks happen. People will do that, but these are the stocks you want to stay away from, for one, and then for two, every company that you see and know of is not always doing well in the stock market. Like another company, Nike, has recently hit the lowest of the low. It's still low. Damn. Nike's disappointed me, man. I had walked in there the other week, and they're kind of still beating their. So what's killing them too is when the tariffs started, they got to pay $1 billion. I think they got to pay like a lot of their profits in the tariffs because their shit gets made in China, and they just Nike's not eating, man. They are not eating. They're at a low of $41 from its all-time high. It is a 200% decrease. 283. 300% decrease. I mean,
it's devastating.
It's devastating because Nike, you still walk in there today. They still got the nice looking store. They still got the nice quality stuff. Hopefully, they can turn around. One of these days, I'll look at their financials and really dig into the company because it's at a low. If they turn around, this is where you want to buy. You know what I'm saying? Cause I walked in the store, the Nike store the other day. I still get that. They get that futuristic vibe. Nike's, I feel like they going into that futuristic sportswear and really doubling down on that because there's a lot of stuff that you can get on Nike that you can't get nowhere else, man. But another prime example of a great company that we see every day, but you don't always want to invest in those companies. It's important that you look at those financials. Anything you want to say about Nike?
Man.
God damn, man. Nike, man.
Doing it.
Right here we got gas prices should be easing soon with confidence that the Iran war is over officially for 4 days straight now. Ships have been passing through Strait of Hormuz. We already talked about that. How much time we got left, man?
We coming up close to an hour for real.
No, we not. We have 40.
Okay.
Okay. That's good money. All right, we have 40 minutes. Something that I did want to talk about real quick is the difference in the indexes. We could possibly end with that. So,
was there more?
Huh?
Was there more after that?
Nah, there's not really much more after that besides like the personal. I don't have anything planned for that though. We're gonna talk about the difference in the indexes. Like you got the S&P 500, you got the Dow Jones, and then you got the QQQ. We're going to be talking about the different indexes that make up of America, man. So you got the S&P 500, which is exactly what we look at every day, right? This is what I love looking at the most. This is what I like to trade the most. This is what I go to sleep with these charts on, man. So the S&P 500 started by the company Standard & Poor's, which is where the S&P comes from. It evolved from a smaller 90 stock index created in 1926. The tech breakthrough in 1957, it was only possible because of a new electronic punch card computers that could calculate 500 stock prices simultaneously in real time. So that's where the 500 comes from. The design, it is market cap weighted, meaning larger companies heavily dictate the movements. It represents roughly 80% of all U.S. stock market value. That's why you see these companies, Meta, Amazon, Apple, Nvidia, Microsoft, Google, they move most of the S&P 500, and when they're down, you see the S&P is down. When they're up, you see the S&P is up because these are the top companies in our world, and the S&P 500 is weighted by that, right? So, go ahead, real quick. Last fact, it actually holds 503 stocks. It doesn't actually hold 500. Some companies like Google, Alphabet have multiple classes of shares listed. What was you about to say?
You said that the S&P was created in 26 and the tech breakthrough in 1957. Touching on that, I learned about this guy. His name is Ben Simons, or Jim Simons. What, Ben or Jim? He was the first person to create kind of like a bot for trading in hedge funds. He was the first person to create an algorithm based off math and code to what we have today. Is this, even the chart wouldn't even be possible without Ben or Jim's innovation. He was the first person that created kind of like a trading bot, but it's not. That is very simple that I'm saying. He created a way and a strategy to analyze and see all of the stock that he wanted to get into in 1952 or 4, I think. So that tech breakthrough is what made me think of that, because that's fire.
Come on, man.
It's around the same time. I don't know how much impact Ben or Jim had. Let me look it up real quick. I think it's Jim. Real quick. Go ahead though.
But just another strong reason that
Jim Simons.
There we go.
Yep.
Jim Simons, shout out to him. Just another reason as to why you need to get invested into these markets, because they've been around for so long. This is what makes up of America, man. This is where they put their dollar and have been putting their dollar. This is not anything new that started in 2020. Now we got the Dow Jones Industrial Average, man. This is the one that we might talk about the least, but it was created May 26th of 1896. This is the oldest one. This is the oldest one before the S&P, man. It was created by journalists Charles Dow and Edward Jones to measure the raw economic health of America, right? So it focused on the top 30 industrial companies of America, right? The early days, it originally tracked only 12 industrial companies like coal, oil, and steel. General Electric was one of the originals, but it expanded to 30 stocks in 1928. The quirky design is what they call it. It is price weighted, so it's different than the weight, the market cap weight of S&P 500. The index value is calculated by adding up the raw dollar price of all 30 stocks and dividing by a constantly shifting Dow divisor. A $400 stock moves the Dow more than a $50 stock, regardless of the company's size. There are zero actual industrial restrictions on the index today. So you got tech companies like Apple, Microsoft, and Nvidia. They're also in this index, man. What's your thoughts on the Dow Jones, brother?
Yeah, you said that there was metals in there. So is that copper too? Copper in there?
I'm not really sure. I wouldn't put it past that they have some copper companies.
Yeah.
Some companies that work on copper up in there.
I think isn't the Dow Jones like? What's the price of the Dow?
The price of the index is 30,000.
Yeah, 30,000 for 30 companies. That's kind of crazy.
US 30, 50,000. Right, so it's been around. Keep in mind, it's been around the longest of the NAS and the S&P 500.
Yeah,
you know
18.
So it's been around 1896.
96. That is.
And we were
a long time.
1957 with the S&P 500.
Yep.
So 1957 S&P 500 created. Dow Jones 1896. It was the first one, and the Dow Jones focuses on those more simpler industrial companies, like you mentioned, metal companies. Coal companies, oil companies are in here. You got companies that focus on, like construction, like Caterpillar, Home Depot, those type of companies, right? The more simpler companies.
Yeah,
Lastly, the most recent is the NASDAQ 100, right? So the NASDAQ 100, 1985. So we got 1957, 1896, and 1985 for the NASDAQ 100. It was created by NASDAQ stock market as a marketing tool to separate its elite non-financial companies from new penny stocks on the exchange, right? The tech boom. It became the global poster child of the 1990s .com boom and the modern digital revolution, as it captured explosive growth of early tech giants. So because they get those penny stocks and those smaller companies, they end up getting in on those tech .com companies that end up coming out and benefit from that early on. Right, so the design attracts the 100 of the largest non-financial companies listed exclusively on the NASDAQ exchange. It relies on a modified market cap weighting system to prevent a handful of mega caps from completely overriding the other 90 plus stocks.
Well,
yeah,
we ain't doing too much of the
financial companies like banks and insurance firms are strictly banned from entering this index. Right, so. Yeah, the NASDAQ is a little different, man. The NASDAQ is a little different. What was you about to say?
The goal was to try not to have bigger companies outweigh the smaller companies, but we got the 7 top tech companies right now that control 70% of it. Like, whatever, but I feel it though. What interests me was the US 30, man. The Dow, that's crazy that they've been around for so long. And yeah. Price is 51,000. Imagine having a share of the US 30.
Of the US 30,
That's
man.
crazy.
Just one. So if so the market has been around since 1896. Right. And you still afraid to invest today. That's it. I'm gonna end it right there. You can finish saying whatever you want to say.
Yeah, man. Power getting in for real. Like that's like 2 or 3 generations before me. 50,000. Imagine what it was like before, right? Imagine a $1,000 Dow, US 30. That is insane. But it's Full Circle Wealth. We going live every Wednesday. We dropping heat on the gram every single day. Dropping live or dropping and updating the Discord every single day. We're in the Discord every single day, man. Take the time. Hit that link in the bio, man. Join the Discord. Come join us. Nothing but open community and open arms, man. You want a hug? We got you.
Yeah, I ain't giving you no hugs. Psych nah. Psych nah. Yeah. Only if you putting in that work. I'm not giving you no hug if you still acting like you're scared and don't want to put the work in.
Yeah, no cap.
I'm really gonna put you out the door.
Dow Jones been in the game for 150 years, damn near, man. You gotta get in it, man. You gotta. Yeah, there ain't no. Yeah, shit. Full circle wealth, man.
Catch you guys next Wednesday, man. Make sure you get a workout in or something. Stay
Be
healthy.
outside.
Get outside.
It's 80 degrees, man. Don't be in the house eating hella Funyuns and Cheeto Puffs. Vibes.